welcome back to yet another episode of Reinventing Finance. And my name is Nick, and with me as my co-host is Tom this morning. Tom, how are you?
Fine, thank you very much. Looking forward to our conversation.
As usually, it's not just Tom and myself in our little echo chamber. We have Rick, I believe, somewhere from Spain, dialing in. Rick, how are you on this fine morning?
Nick, I'm very well indeed. I am, as you say, I'm in the southwest corner of Spain. It's the very last town in Spain. And as I look out my window now, I'm looking at Portugal. I'm right on the border, and just there is the Atlantic. So I'm at the end of Spain. But it's good to be here. Thank you for inviting me, Nick. I have a question for you. I have a question. Why is it taking you so long? I've known you since 2015. I was looking back at my notes. The first time we spoke, you were at Google Campus, and we had a phone call. And so I was when we set this up, I thought, I'm going to say that to you. Why is it taking you so long to have me on your podcast?
So I think that's a good question. So I think first of all, my entry into podcasting was a COVID reaction, because prior to COVID, I was on and about, sleeping in cheap hotels and really fancy InsurTech conferences, because they were all fancy. And it was a way for me to continuously to engage in a virtual way. I dabbled in this. I met Tom at some of these really fancy conferences. We stayed in touch, and I don't know, 1.5 years ago, we decided, listen, why don't we branch out together, because it's just more fun. So that explains, the whatever 7 years minus 1.5. It does not yet explain the 1.5 years. And
it's okay. It's a rhetorical question.
There's just no answer for that. So coincidence.
And here you have an Englishman, a Dutchman, and a German, and the German does not get the rhetorical question. Go figure. He just goes, "How are you?" And he gives you his life story and medical history. Well, we always wanted to make this a little bit European, and you caught me out. Thank you so much.
I'm sure you'll get your own back. I'm sure you'll get your own back.
But good things come to those who wait. Real pleasure to have you on board. For those of our listeners, viewers, why don't you briefly introduce yourself and what you're doing at the intersection of Spain and Portugal these days?
Well, if you'd asked me that question 2 years ago, Nick, I'd have told you that I was retired. I was enjoying life. I was enjoying the weather. I was enjoying the culture. I was playing lots of golf.
I hope you're enjoying life still.
Well, I'm still enjoying life. But what I mean was that there was a social life. And then, of course, lockdown. I have, like you just said, that I also have a kind of COVID dimension to what I'm doing now. Because when lockdown came here in Spain, it was quite severe. It came very quick. And it was essentially house arrest. We had 3 months where you could go out once a week to do some shopping, and that was it. We couldn't even, go out for a little stroll. So it was quite fierce. And like a lot of people, I spent 3 months. I learned how to make sourdough bread. I started doing yoga at 7 a.m. I did all of those things. But the thing that happened, which I wasn't expecting, was that I suddenly had time. I had this appreciation of time, because everybody that will be listening to this podcast went through lockdown, and all of a sudden it's like, well, what am I going to do? Because I'm either getting up and going to work, or I'm going out, or I'm doing all these things, and now all of a sudden
Clubhouse, of course, Rick. Weren't you on Clubhouse?
Well, I did it for about 15 minutes, like everybody else. I did it. Well, Clubhouse is a great example of how there were some things which really benefited from that pandemic, and then of course they haven't necessarily done so well as we've gone back to more of a normal life. But the thing that happened to me was with this kind of this luxury of time, was I started seeing what was going on around me that was just passing me by. So, and it was really in the stuff that interests me. So big tech, how they dominate the tech sector. I have a particular interest in social media and the sort of human impact of social media. I've been involved with Bitcoin since about 2014. So I have a sort of a non-technical layman's interest in the cryptocurrency space, and particularly this move towards what we would call Web3, this next generation of a sort of decentralized internet, whatever we want to call that. And then, of course, we've had, the metaverse came in a year ago. I mean, we've had virtual reality for a while, and all of these things come together. And I started thinking, you know what? I'd forgotten how much I enjoyed just knowing about this stuff and learning the stories about this stuff in what I call the tech economy, because I was too busy going to fiestas and sitting on the beach and, drinking sangria. And then all of a sudden I had this time. And so I started doing what I really have always loved doing, which is storytelling. So now I have a weekly newsletter, and I'm up to about 14,000 subscribers. I do a podcast with my friend Sean Weston, which is called Big Tech, Little Tech. And we try and make some sense of what's going on with tech. And I talk to people about, and I advise companies on what's happening, but more importantly, what's coming next. So what does this all mean to our digital lives? What does tomorrow going to look like when it comes to trying to work out where to place your bets and, where's the puck headed to in that old cliche. So that's what I do now. So I write, I publish, I talk, I try and entertain.
I could check, but what do you put on your LinkedIn, and how's that different to what you're telling your wife and your friends what you do? Just out of interest, do you go XY, podcaster, influencer, thought leader, king of X, and then you tell your wife, I just follow my passion, but just out of interest?
To my wife, who has very little interest in any of this thing, actually, my mum, funnily enough, is an avid listener to the podcast, and she loves it. And my mum, who's 78, keeps asking me these questions about Bitcoin and cryptocurrency, and it's just I never thought I'd have those conversations with my mum. No, to my friends and family, I tend not to. I've always been very good at divorcing my kind of professional work life interests, because I've always worked in technology. Since I was 17, I've worked in the IT industry, but I've never really discussed it when I come home. And even if you ask my kids, it's a bit like if you ever used to watch Friends, no one ever knew what Chandler Bing's job was. Do you know what I mean? They all used to, his housemates, it was always the joke, it's a bit like that. So when people ask me, I just say, look, I talk about technology. And kind of leave it at that. Sometimes they'll probe and they'll say, well, what in particular? And then depending on who asks me, I'll go down a particular route. Sometimes people just want to know the cool stuff, what's going on with self-driving cars or robots, but some people are interested in this kind of more philosophical debate about the harms from social media. And I like a lot of that debate about free speech. And should social media companies like Twitter and Facebook be doing more? Are they responsible for teenage self-harm on Instagram, or is it other things, or is it just a new flavor of an old problem? And they can get quite interesting debates, so I like having those. And some of my friends who are more politically motivated will have those conversations with me. But most of my friends will say he does something with technology, but they don't really know what it is.
I do something with insurance. Usually people don't probe.
Well, you must have the same, Nick. I mean, you must be around a dinner table with friends, and you say, you do something with insurance. Most people will glaze over at that. I'm sure you don't go into any of the details explaining which part of the value chain you work in, what your proposition is.
It depends on how interested I am in a conversation. If I don't want to talk to someone, I tell them I work in insurance. If I am neutral, I'll say, I work within an insurtech startup. That's usually what I stopped doing is mentioning my role in.
But you come from an insurance family, don't you? So I mean, you kind of,
that's correct.
Insurance is in your family lifeblood. So I mean, I'm sure when you're with your family and your folks, you can explain what insurtech is and they'll know. Whereas most people would,
That's true. My dad, having run an MGA and knows how things actually work in practice when trying to connect customers, brokers, MGAs, insurers. No, that's true. Rick, you've already alluded to it, that you've worked in IT or tech. your life. This podcast is obviously reinventing finance, so it's finance and technology. So is there any particular steps in your career that have, I don't know, influenced your view about, let's say, insurtech, fintech in particular, that you think are worth mentioning? And if so, which are those, and what did you take from some of these steps?
So I've worked in insurance. So I've worked in technology for my entire life and many different segments. But from around 2000, it's always been in financial services. So for my last 10 or 12 years as a corporate employee, I was in sales. So I ran corporate international sales teams that was essentially selling software solutions to primarily insurance companies. We had some banks, but it was primarily insurance, and it was everything from front to back. I had global sales responsibility for the reinsurance software product that we sold, plus European responsibility for both sort of the claims end and the policy administration and the pricing and distribution engines. And we sold. So my knowledge of insurance is as an outsider selling into the sector, as opposed to being somebody like you who's worked within it. And so my knowledge of it is simply because I had to learn how to have conversations with customers that were senior executives at insurance companies. And I just needed to know what an MGA was. I didn't necessarily need to know how they ran at an intricate level, but at least to just understand what the three-letter acronym means. Otherwise, I'd make a complete ass of myself. So my knowledge of insurance came that way. But the key kind of pivot moment for me, particularly around fintech, was I remember at around 2011, 2012, I started doing some charity work. I was what's called a liveryman with the Worshipful Company of Information Technologists, which is one of these wonderful City of London, old establishments, which is the livery, a livery company. And I was involved there, and I got involved with their mentoring program. And I started working with technology startups around 2011 and working with accelerators. And what I saw, and this was kind of the eye-opening moment, because all of a sudden I thought I knew everything there was about innovation in insurance. Because what was happening was if I was going to see a customer, I would ring my marketing department up and say, look, I'm going to see the claims director next week. Can you get me all the latest innovation stories that are happening in the industry? They would give me a briefing. But what they would have done is they'd gone on the internet and they just Googled stuff and they'd done some research, and they would give me a pack of what was published. But when I started working with founders, people like yourself, Nick, who had a passion and a commitment and a desire and a need to change things, you had a much greater insight and understanding of the problem you were focused on. And when I started mixing with people like you in around 2012, 13, 14, I suddenly started thinking, you know what, I'm deluded, because I'm going into these conversations with senior execs thinking I know everything about what's going on. And all of a sudden I'm meeting all these young people who are extremely smart, really driven, very passionate, high energy, but raw and needing some, kind of some shaping and guidance. But they just knew stuff that was a step on from where I was. So what I realized was that the innovation I was kind of talking about, and the ignorance was my best friend here, because I thought I knew everything. The reality was I was a step behind. So that was very appealing to me. I was like, I have to get more of this. So I started doing more and more work with, particularly with accelerators, because it got me closer to the startup. So during the day, I was a corporate sales director, and I was doing all the stuff, like all the spreadsheets and answering all the emails that everyone was sending down to me. But by night, I was going into the Dragon's Den. I was sitting in front of startups. I was listening to the 7-minute pitches. I was making investment decisions. I was giving them guidance, because I was a corporate sales guy, particularly on those that were making B2B solutions. I could help them, genuinely help them. But the return for me was I got so much insight into a world which I would never have seen before. And that's why in late 2012, I came out of the corporate world and have been independent for the last 10 years. That's kind of a long way of saying that's kind of how I got there. And that was my kind of credentials. From there, when I came out of corporate sales, I first started, when I first met you, when we first spoke, I was writing for a small boutique consultancy called Fintech Advisors. Then I got asked to be the chairman of the Digital Insurer with Hugh Terry out in Singapore. I started working with Startupbootcamp, the InsurTech accelerator. I did some work with Mudilab out in Madrid, which was great fun. I got invited to do some advisory board work for a number of startups, InsurTech startups, around 2015 to about 2020. And I've angel invested. So I've been an early stage investor with a number of InsurTech startups, well, and banking as well, because I put money into a few that aren't here anymore. Making investment decisions has not been my strong point.
What are the lessons learned there for you?
What are the lessons?
Mm-hmm.
So I would probably put it down to three things. I mean, I've interviewed and worked with hundreds and hundreds of founders, many of the, from those that went nowhere to probably Daniel Schreiber at Lemonade is the most successful out of all of them. And I think the number one lesson is that insurance is a really hard industry to change. I write a lot about, say, Amazon and what Amazon are doing. And, retail and e-commerce is significantly easier than insurance. You look at probably even electric vehicles with Tesla is easier than insurance. And so I think my number one lesson is that insurance is a really hard industry to change. And where I've kind of become a little disillusioned is that in the early days, when I was doing a lot of writing around specifically on InsurTech, the big promise for me was that there was going to be this shift of focus towards customers, that it was going to be around delighting the customer, would push operational excellence and operational efficiency into lower down the strategic agenda. And that just hasn't happened. I look at many of the sort of more digital modern platforms today, and they put a focus on the customers, but the traditional insurers haven't really changed their model at all. They're continuing to do the same as they've always done. And I think it's because the challenge for insurance, which is distinct from many other industries, is the business model has this natural conflict between the people with the risk capital and wanting to hold on to the money, and the customers that expect everything when they make a claim, which is not every customer. And I think there's just a conflict there. So I think probably the number one lesson is the industry is really hard to change. The other, that's probably as much as I would say on that one. Yeah.
May I? One question and two, I don't know, maybe they'll start at questions, but maybe where we disagree or are using different words. One, when you say, why do you think insurance is more difficult than e-commerce or even electric cars? Why do you think that is? Why is it harder to innovate there?
So there's probably a number of areas. I mean, I think you've got some structural ones. So straight away, you've got regulation. So there's a regulatory environment. But I think before that, there's a more fundamental challenge, which is around the customer proposition. So Jeff Bezos can come out and he can say, the fact that you're paying $10 and waiting 5 days to deliver to get the product you just ordered online is a really bad proposition. You pay me $10 a month and I'll give all your deliveries for free and you'll get them tomorrow. And this notion of convenience has driven Amazon for 25 years and has made them what they are today. And so even to the point where you now see, the fact that in some Whole Food stores in the States, your palm biometrics is linked to your credit card. So you just wave your hand over the sensor and the bill is paid. You're not going to get more convenient than that. It solved the problem of having to get your wallet out of your back pocket or get your phone out and swipe it. That's the level that he's gone to. Whereas if you think about insurance, then where do you go in terms of making that a better proposition? Because the customer just wants more. Jeff Bezos was able to give the customer more, and as a result, differentiate themselves. But with insurance, what would you do to give them more? The promise, all the marketing material is promising things like an easier claims process, or we're gonna settle it faster. But the reality is they're not delivering on that, because what happens is that for some they are, but for the majority, for a large number of insurance claims, what will happen is the small print comes into play, and they say, yeah, but we can't, in this case, give you a better service because we have these exclusions, or you haven't met these certain conditions. And you don't get that in e-commerce. With Amazon, they don't, if you say, I don't want it, you just send it back. They don't give you a small print that says, well, you haven't returned it in time. So I just think that the customer proposition for insurance is a very difficult one to change. And no one's really changed it. Lemonade have tried to change it. And I think if anyone's going to show that it can be done differently, it will be Daniel and the team. But I remember asking him a year ago when we did a 5-year anniversary video together, do your customers really care about the fact that you've got this business model that's different to anybody else? And he said, yes. And forgive me, Daniel, if you watch this, I didn't really buy it or accept that they did, because I know when I buy insurance, I tend to just do like everybody else, and I go for the cheapest. I have also a bias. So there's some insurers I would never touch because I just think they're cowboys and they're driven too much by the old model of kind of claims optimization. I think was that kind of neat term that was used to say, well, we're basically going to find any way to not pay. And I think until that sort of changes, I don't see insurance really changing. That's why I'm kind of quite bullish around the Web3 stuff, the DeFi, the decentralized finance stuff, because I think that I was quite into peer-to-peer when it became a big thing around 2015, 2016 in insurance. And it just didn't take off. But I do happen to have a soft spot for DeFi insurance. And I think there is maybe room for some types of insurance where you actually just cut insurers out altogether. And
Rick, before we go into DeFi and peer-to-peer, I think let's, and we will, because I think I just want to kind of dissect it. So basically what you're saying is that, so I think one of the main problems with insurance as a product is that, other than consuming something or even getting financing for something, it is it's psychologically, I'm now paying for something that hopefully never happens in the future, so it's very hard for me to consume that product, and most interactions with it are somewhat negative. So I think from a psychological and behavioral point of view, insurance just works differently than selling Snickers. And so you need to be very careful if you just go, let's now Amazonify this. Now, to your question, I think it's very easy on what a good insurance product is. A good insurance product ultimately is it's a lot of relevant protection for an adequate premium. So if you want to optimize an insurance product, the things that you take out is you minimize administration expenses to organize risk transfer, and you minimize, for those who want to, the distribution costs in the product. But risk premium is just a function of risk. And Daniel hasn't changed that. If anything, he's offloaded it to reinsurance companies.
Sure, yes, exactly, yeah.
Now, I think the challenge with a product where your counterparty has significant information asymmetries and a negative emotional and psychological connotation and very few touch points to actually purchase the product is to make it effectively to self-serve in an adequate way. So that is where this trust element comes in. And when you see where startups have struggled, they have misinterpreted the term of convenience into self-service forms or speed. But that's not what insurance is about. Insurance is not about speed. It's not about self-serving. It's about trust and being able to either do it yourself because you can self-educate, and having adequate information. And price comparison sites started out really well. Now the UK is seeing the flip side of price. But that's one thing. The other one is trusting someone that a person to deal, on your behalf, or it's, positive branding. But that is actually very convenient. Having someone deal with something that is complicated by design, that you don't interact with frequently, and that where there is a business case for expert knowledge is actually a very convenient way. Now, fast forward into which insurtechs work, significantly better than those who tried to simulate, who focus on form over substance, with those who enable personal advice as an option in the equation, because that is just a very convenient way to interact with a product. And what we're seeing now and how insurance is being optimized, because I actually full-heartedly disagree with Daniel that insurance is fundamentally broken. I mean, most businesses have a margin and they don't pass on all the costs to someone else. I agree that the claim situation is significantly, it could be interpreted as an adversarial situation, but is this anywhere different than Apple charging 90% margin on exploiting people in Southeast Asia? I don't think it's structurally different. It's a good sales story. Daniel is a great salesman, great PR person. But I don't think he structurally changes anything, because I don't think it needs structural changing. It just needs the administration and the distribution of it needs to change.
I would like to. I would like to dive actually also more into lemonade, because let's say for two reasons. One reason is the question is that is this sector still as immature, and we're totally in the beginning of this whole, let's say, you can call it disruption or whatsoever. Probably Lemonade is one of the companies which you can really talk about and then discuss. So I would like to add what Nick said. And it also would be very interesting to get Daniel in our podcast, because let's say everybody probably in this whole sector will agree that he's a great marketing guy. But it would be interesting if you really dive into the numbers. Then insurance, to my point of view, in the end is about combined ratio. And that takes pretty long to prove that you're right. And there's a lot of marketing around it. And you have the problem that the life cycles of external investors are very short, and insurance is exactly the opposite. And at the client side, you have, if you compare it with e-commerce, you also have the opposite situation. That's a no or low interest product, which is exactly the opposite of an iPhone or let's say something you can sell at Amazon. So I think if you would really dive into this with Daniel, I'm really interested in what are the lessons learned for all those companies still, let's say, on their way to become successful or not. And that's why I asked you as the first question, what are the lessons learned of, let's say, of those investment decisions? Because I just think that it's much more complicated. It's a little bit like if you have a sales background, that everybody in the past said, if it's online, you don't need sales anymore. You can cut out the middleman, etc. And we just know that it's not true. People still want to have a kind of combination, or they want to have, especially when things become more complicated, they want to dive into this, let's say, in a more severe way. And then you had this developments before with all those companies saying, no, we only do online and we cut out the middleman. And in the end, they had to spend the same amount of money on, I don't know, marketing or TV commercials, or and it's not different from direct sales of car insurance in the past. So
I think coming back to so as an outsider from an insurance point of view, so I think so I have two kind of like takeaways from what you just said there. One is it's all about setting expectations. And what Amazon, and the difference is that Amazon have set a series of very clear expectations that they deliver on ruthlessly every single time. So the reason Amazon is still the number one place that everybody searches for products, they don't even go to Google anymore, they go to Amazon if they want to research anything, it's because they know what they're going to get time in, time out. And it's the case with insurance that you never really know, you never really trust, even though you see some super slick, advertising. I mean, Nigel Walsh was just circulating the one, did you see with they're using Rick Astley in Insurance AAA or whatever it was in the States. And, it's a super cool one. And it's sort of like, never going to give you up, never going to let you down, these kind of like Rick Astley song. And that's great. But most of us that have ever made insurance claim know that it's actually torture. That it's you cross your fingers as to whether you're going to get the response you want. And that's the fundamental problem with insurance. It's got nothing to do with, from the customer's point of view, it's got nothing to do with any of the KPIs, any of the metrics, all that kind of internal stuff. And both of what you said there came at it from an internal perspective. Right. What I heard was, this is what we need to do from an internal perspective to make better products, to be more efficient, to reduce our costs. Well, frankly, I would argue that the guy and the girl in the street who's buying insurance doesn't give two figs about any of that stuff. They want to know, if I give you £400 for my house insurance or my car insurance, if something goes wrong, you're always going to be there. You're going to help me out of my situation. And it's like one of the great stories is, imagine like, the mum, the parent, you've got a young child next, right? So, so one of you's in a couple of years, you're going to be taking the kid to school, probably in a car. If it's you or your wife, and the car breaks down or someone hits you, right? In no fault of your own, all you want to do is get your child to the school, or for you to get to work, or for you to carry on doing the shopping. And yet, what is the insurance claim process, right? Get the forms, give me all this kind of ID. Nobody from insurance has yet thought, right, okay, the problem is for my customer is, how do I get them to complete the task they're doing, and we'll sort it out afterwards. And because what happens is it always comes back to this thing of operational efficiency, and how do we minimize our losses, and how do we do this, that, and the other, which is an internal focus. And the thing that I've found, I would say, from talking to both established insurers over a long period of time and all the startups end up where the traditional insurers are, which is thinking about how do they make it more efficient and effective internally. But the customer proposition doesn't change. And so Lemonade, I think, are different. I think it's unfair to call Daniel, or to label Daniel as kind of a marketing. He's a super slick CEO. Right, he's as good as any of them when it comes to dealing with after the bell and all of the the sort of stock analysis news stories that he does. But behind that, I know, because I've had a look at it, they're genuinely committed about doing something different, and he has the support of the team around him, and I think they will do that. And we're judging Lemonade after 6 years now. They're 6 years old next month. And, it took Amazon, 8-9 years before they turned a profit. And that's a much quicker life cycle than an insurance one. So I don't think, my guess is, and I don't have any insight to this whatsoever, but I would think Daniel's probably setting expectations it's going to be 10, 15 years before you're starting to see the kind of...
Yeah, but let's say...
It's got to take that long, because as you say, Tom, it's such a long tail.
But just let's say, I actually really don't know if this idea of that the insurance are all rip you off, etc. That's not my perception, especially not on the European continent. So what I see is that, and I also notice from, let's say, as I have been an advisor myself, there's also a different way of seeing the whole topic. So if you just see, for instance, from a client perspective, already 25 years ago, Interpolis in the Netherlands, you could just phone them and they said, no, yeah, you can, we put the money on your bank account. So I never had any negative experience with an insurance company.
Yeah. One of the things I've learned living in Spain is that the claims experience is very different here in Spain than it is in the UK. So I kind of, my kind of disclaimer is that I only ever had a UK perspective. So my whole experience of insurance as a customer was from a UK perspective. Yeah, since I've been in Spain, the way I buy insurance is different, and the way that they serve me when I have a claim is different. So I guess when I say things, I'm really talking from a UK perspective, but I would say it's definitely different from my experience on mainland Europe.
But as always, if you push on the price, let's say for a long time, and there's no margin left, then the only possibility you have left as an insurer is to avoid the claim. So that happens, let's say, and you can also take other industries. But I wanted to add something else. Let's say if we would just consider fintech to be, let's say, more advanced on the timeline, and you just see the development of neobanks, which I find pretty comparable. There you had the same kind of development, and then it takes, and you have innovation cycles. And then, I mean, that's also classical in all this topic of innovators dilemma. And then sometimes things are underestimated, and in other phases they are overestimated. And then you have to find a kind of new balance. But for instance, nobody says that Lemonade or Daniel is not a good company or a good CEO. We just say or think that if you just dive into this more profoundly, and if you, for instance, just compare, let's say, combined ratios, or like it's the same in neobanking, let's say adding accounts like Revolut does, and N26 doesn't say anything because you haven't earned any money with adding accounts or downloads. So I think if we really want to see what will happen, I think it will be much more long-term oriented, because in the end it's about what kind of risk did you get in, and that's about combined ratios.
Yeah, Tom, I see it different. I'm not disagreeing, but I don't think that's where the change is going to come. Okay. To me, if you compare it to, say, let's move to vehicles, but we can do exactly the same thing with e-commerce and retail. What Amazon did, what Tesla did, was they verticalized. So they cut out all of the different chains. No one in insurance has changed that model. You still have various forms of distribution. You still have multiple layers right the way through to the reinsurers, and often multiple layers of reinsurance at the back end. And all of those different steps, none of that model has changed. Lemonade they've done something to collapse it, because they're doing their own direct sales, and they're essentially the carrier, but they still offload everything to the reinsurance, and that's covered. But they have taken some of the steps out. But for most insurance, and particularly some of the higher margin products, most of the insurance premium is going on, everyone's taking their little piece as they go along the line. Whereas if you look at what Amazon have done, if you look at what Elon Musk has done with Tesla, they've cut all of those out. So Tesla have their own sales, they do their own maintenance, they do their own manufacturing, they make everything, pretty much everything now in their gigafactories, and they made 3 million cars now, and it's hardly any of it's relying on somebody else. Where is that going to come from insurance? Because the only way you're going to really start driving the efficiencies, which would then lead to a better product. So you talk about the neobanks, and they had, Revolut. I've used Revolut for a number of years, and it's very easy, but the product is still the same. They've just digitized it. My old UK bank in the UK is a nightmare to work with, and everything is just so slow. So they've speeded it up, but the proposition is the same and the charges are the same. Then Revolut can't give me free banking. I still have to pay for that services. And in Spain, my banking, I pay a fee every month for my free banking. So none of that's really changed. And I don't think anyone's really going to make a fundamental change in banking any more than they are in insurance. Certainly not when you compare it to other industries. We could go on. I think where you're going to see a change, I'm very interested in what Amazon are doing in healthcare in the US, which is a totally screwed up, was it $4 trillion US healthcare is a completely screwed up, insurance-based, unique in the world kind of marketplace. And I think Amazon are going to make inroads in that space, and they'll do it by simply taking insurance out of the equation. And I think that a lot of the solutions to the insurance industry will be that actually alternatives to insurers will be the solution. So Tesla providing some form of protection when you buy a Tesla. You know, you could see a situation where Mercedes, you buy a brand new Mercedes and they say, if you get a bump, bring it in and we'll fix it. You know, you pay an extra $5,000 a year. If it gets stolen, we'll replace it, because they're so confident in their anti-theft devices. In which case you don't need insurance other than for third-party liability. So I think actually a lot of the solutions for insurance will be non-insurance company solutions.
So I think, and I mean, Rick, you were right? We can go on. I mean, we haven't even touched Web3, crypto, metaverse, you know, which in and of itself, conscious of time, I would try to put this into some form of wrapper and imagine we had an insurance CEO, you know, with his or her restrictions, and he's a friend or she's a friend, and they're genuine, right? They don't want to do lip service, innovation theater, etc. What would you suggest for them to do, to look at, from, you know, to take that outside in view? I mean, they have to meet at some point, right? But what would be your recommendation on the golf course to say, listen, if you do this, I really think it's going to be for the better for, you know, most stakeholders involved?
So it's a great question, and there isn't enough time to give it a full answer, but I would condense it by doing completely redraw the customer experience. Forget about internal operations, forget about legacy IT, forget about any of the ratios that, you know, Tom refers to for now. Just put yourself in the shoes of the customer, because that's what Steve Jobs would have done. That's what Jeff Bezos would have done. That's what Elon Musk would have done. And frankly, they are three examples, right, that you're going to want to, don't look at Jack Welch, right, which was kind of the old model for General Electric. Don't look, you know, and he's discredited now anyway. You look at those.
Rick, just so outside of redraw the customer, is there any example other than Lemonade where someone who might not be, you know, have a tendency more on the left brain than the right brain side could make this visually or haptically to say, and what you mean by that, we're not there yet? Is there anything else other than have a look at what Lemonade is doing? Do you see any examples yet? Or do you see, don't look at examples? We're none of it, what we're seeing, we're just scratching the surface. So by all means, I
think the answer is don't look at examples. I think if I look at Lemonade, right, who I do, you know, and there are some copycats, and there will be other models that come along, and I think everybody's looking to see whether Lemonade will, you know, do another 5 years, and whether they'll survive. But I think it is. I would say to the CEO of the traditional insurance company, don't listen to the people who are going to say, like Tom was, you know, it's all about your various ratios and whatever, or as you did, it's about let's look at redefine the product. Go and properly understand the customer experience and what you need to do to deliver on a customer experience that's going to fundamentally be different to anybody else. Because that's what Jobs did, that's what Bezos did, and that's what Musk did. And I would start there. And you have to start with the customer. And because if I look at Lemonade, I think, unfortunately, as they've grown, as they've become a public company, and as they've gone multinational, multi-line, they have become more like a traditional insurance company because they've had to, because of the regulatory environment and because of the competition. And I look at it and I think there's a conflict going on between wanting to stay true to the original promise and ideal of the business, and the fact, the reality is that we work in this regulated market. Because I tell you what, my warning to insurers is, if somebody doesn't grasp this nettle and fundamentally fix it, you will find yourself in a situation that for a lot of you, people won't need insurance. Because for the lot of you have sometimes we have to buy insurance because it's the law, right? You have to have certain insurances, but a lot of insurance is because it's the safety net. It's that putting something away in case something bad happens. And I think there will be other ways that you'll have protection and you won't need to buy insurance.
Agreed. Tom, I'm the timekeeper. I think we, unfortunately, Tom, Rick, ran out of time. I could have just gone on and on, Rick. It was a pleasure, a true pleasure. I think you've done your job. You've rattled the cage. That's exactly what these conversations are for. Thank you so much.
You're welcome. Thanks for asking me.
I am looking forward to seeing you one of these days on the, face to face on the circuit. Continue doing what you're doing, and I'll summarize this, and I'm looking forward to your comments online. Try to give this conversation justice. Could have gone on for ages. Thank you, truly. Thank you so much, dear sir.
You're welcome.
Tom.
Thank you, Rick.
You're welcome.
Take care, gents.
Enjoyed it.
Likewise. Bye-bye.